All right, welcome everyone, especially you folks watching on YouTube. All right, couple things. I always like to remind everyone what comes out of my mouth and what we talked about. Couple trades. First off, Cloudflare, as I did give a disclosure, it is a position in J Person Asset Management positions. Cloudflare really didn't do a whole lot. We had an idea that we would get at least a pop, and I gave the fact that we could possibly see a rally. I'll get into it in a second. And I said, you got these calls that were going for 80 cents that expire this week. The high of the week was 86.63, and all we did was kind of pull back today to the weekly open. Still looking okay. The other one was MRVL. Many of you guys remember I was talking about Micron could go up to resistance to 106. Well, guess what? You can review the video. 106 was the resistance. It blew through that. It actually closed at 109. I think MRVL did a little bit better, but it did what we thought. It took up some of the other semiconductors like MRVL, and we told you that on the weekly options, the 72 strike calls for $1.30. Well, MRVL hit today 74.83. Those options, you got to puke those out around almost $3 today. The other one for longer term I gave out was the 75.80 calls that expire October 18th. Those weren't that bad. They did appreciate in volume, but the big play was, again, the gamble trade or the earnings on Micron. Now, there's a couple things that happened this week, and I'm going to get right into it. One of the things that we did today was took advantage of some of the big move that we had exposure to. One, Alibaba. Today, just as a disclosure, we blew out a half that trade and rallied to stop up. So that was a big trade. I mean, we were in it for 80.53. I believe the average exit on Alibaba today was like 104 near the high of the day. So 103 and change. I scaled out of some of the trades. We didn't get out of everything all at once. So like say, different accounts and everyone had different positions on. Different share size. We scaled out of that. I still have exposure to that. Newsletter traders, we sent an email alert, get out of half of that position this morning. I mean, the stock goes from 80 to 105. You got to take money off the table. That was a gift. So when we did get filled on a few other things today, and I'll get into that in a second, but a lot of our positions like PayPal, we got out of, we didn't get out of any of PayPal. We just moved the stop up a little bit more because PayPal has run up a little bit. AMD, I'm only in half a position. We took profits at 52. Its stock has continued to bolster to the upside. And everything else had on a rally taken some of the money off. Everything's doing better. AT&T, Pfizer, Boston Properties, British Tobacco. That's kind of like that's better than a T-bill because not only is British Tobacco up from our entry, but it pays a 9.5% dividend yield. And I'm going to get into some dividend yield stuff for you in a minute. But the big news was today, China. So while CNBC and financial news are talking about how great the Chinese-related stocks are, and they were all talking about that today, we took profits on it. So I always like that. I love when the news talks about something because they're always after the fact, right? And they kind of like, look, see, we kind of told you about it. They don't tell you anything about it. But anyway, bottom line, I always talk about after the fact at times. But when they're wrong, do they ever come back and say, oh, by the way, I know we've been telling you guys like Disney several months back at 120 when they were morning, noon, and night pumping out the whole board meeting on Walt Disney and David and trying to kick Einhorn off the board, or vote him out or whatever it was. And or he was an activist trying to get on the board and they had an election. Morning, noon, and night, CNBC paraded every Tom, Dick, and Harry expert on the television show and talked about one company for like 4 straight business days. And the stock was around 120. Goes to 80 and change. You don't hear hide nor hair of these people anymore. It just happens like that. But in the meantime, I kind of liked Disney. We did get filled on half the position this week. And I know I share this with you after the fact, but this is for our paid subscribers. I just like to be transparent because trading is hard. And, you hear all these rumors about Paul Pelosi, Nancy Pelosi's husband, selling Visa before the Department of Justice comes out to investigate him, and watch Visa down, like 8% in 2 days. Another thing that happened today was the Department of Justice, by the way, they've been busy little beavers because today they came out with an announcement that Supermicro was going to be investigated And that stock at one point today was down over 14%. So while the semiconductors all were higher thanks to Micron, Super Micro, not so bueno. Anyway, that was a bit of a problem. So we'll get into a couple other items here and what to do next. That's the key. Before I move forward, I wanted to just reemphasize this week when I started off Monday, I said I'm looking for follow-through strength. Well, we got follow-through strength. This is exciting. It was a big day for us here. Big day for us. So it was a big, big day, and I don't mean to sound like somebody that says it's bigger than anyone, but it was a big day. We had a great exposure to a lot of the portfolio stocks that we were in, and you can tell. I mean, PayPal was up almost 4% today, trading at 80. AMD was up. I think we got that somewhere on the board here. We got a few of them. And then we'll just switch. Here it is. AMD, that's up at resistance. I almost pulled the trigger on getting out, but I'm going to wait another day for the end of quarter because that's the key. I'm looking for more upside riding this thing right into the end of the quarter. And then the gig is about rotation. Money, when stocks make extreme moves, one way or another, right suspiciously towards the last couple days of the quarter, you got to imagine that's more like window dressing on portfolio managers. So one thing I would be looking for a dip, and the reason I'm looking for a dip is some of my technical indicators, specifically some of the things I look at, including a timing cycle indicator. And this is exclusive to my own analysis that goes back probably 25 years. I actually wrote about this in called an 11-week cycle top. While it's not a perfect, and a lot of people look at cycle bottoms as more reliable than tops, but this is one that I discovered in the marketplace. And I mean, it goes back since the late 90s using the ES futures, the E-mini S&P futures. And I actually published, it was an article that was published that I wrote titled Combining Cycles and Pivot Points to Predict Market Moves in Futures Magazine back in December 2002. And back then, some of you may not even remember this, but when there were magazines, Futures Magazine was the creme de la creme of magazines. Stocks and Commodities and Futures Magazines were two of the biggest, and that was one of their feature. It was a cover article, actually. So it was a really good thing. And this we use still to this day. As you can see, not all cycles work perfectly, but it gives you an illustration that sometimes gives you a heads up warning. And when you're near a quarterly or when you're near a monthly or any type of a important higher time pivot analysis and the cycle timing comes in event, you probably want to pay attention to it, as well as use other non-correlated indicators like maybe volume, or in this case, maybe the McClellan oscillator when it's looking at equities. All right, so enough of that. Moving on. For this week, I think that we still have a chance to see the stronger stuff get strong or stay strong into the end of the quarter. But we also have a few things happening here in the market that today's action, they just actually depantsed a couple names. Now, SMCI, I said I would go through that with you. This is Super Micro. Yeah, it's like regurgitated news. We had heard that they were getting investigated back here. Now, it's funny because my indicators, the person's pivot, as well as the PPS indicator, a lot of you guys have access to that via different platforms, including Thinkorswim. But if you look at the date, that's 8/26, a sell signal was generated. News came out that Hindenburg Research says that they thought they were cooking their books. And then on the 28th, the news hit the street that they were going to possibly be investigated with the SEC or the DOJ. Now, this got to tell you something here, folks, that somebody knew the day before Hindenburg Research came out. Somebody knew before the news picked it up and talked about the Department of Justice, but that was back in August, all right? So the news resurfaced again today, a month later. It must have been a slow news day that the Department of Justice was going to look into them as far as their financing and the delayed filing of their, I think, the F10 SEC report. So it's kind of like old news regurgitated. We got to be careful of that in this world, right? Now, I made a comment about Paul Pelosi, that's Nancy Pelosi's husband. Supposedly he was long in the stock and got out right before the big Department of Justice investigation. once again, it's interesting that my indicator, the PPS indicator, generated a sell signal before the big news came out. So what is the moral of the story? Don't ignore the indicators that we've created and the tools in which we've designed, because obviously two of the biggest moves that we've seen that hit the news wires and have created some massive pain for people, our indicators have helped avoided it. And obviously we're using these indicators to pick out some winners. And not to brag, because knock on wood, we don't want to brag, but because the trading gods, don't test fate. All right. I was talking about Snowflake as far as a potential upside. Now, on Monday, I didn't know about this, but again, the relative strength started to improve. Snowflake, I said, miss it. If it can clear that resistance, this thing has some good upside. The volume is getting less bad, right? Well, it wasn't I said, there's the only thing I can find about this is like their world tour, and that was the only news. Well, guess what? After that video came out on Monday, on Tuesday, they came out, I think during the day or after the close, and announced that they were doing a convertible note offering of up to $2 billion. Now that's not good for a company to do that. They expire in, I think half was due in 2027, the other half is 2029. The convertible note means that someone is going to get paid an interest, they raise cash, and they can convert that note into common shares at an assigned price. The assigned price is $157.50 a share. So what's the problem with that? Well, if you're a big institutional investor and you think that the market could go sky high to 235, and now you find out that someone's got a convertible bond or a note on the company that's only going to maybe exercise it and dilute the market with more shares and take it off at 157.5, that might have put a bad taste in investors' mouth, saying my upside might be limited for a while, or maybe they're using that cash to buy a smaller company, and maybe their growth rate isn't going to be so great. And so that put a kibosh on that particular trade. I still think there's a gap at the market. Maybe next quarter there might be something. But if you're looking for alpha, great returns immediately, you're not wanting to stick around for a quarter, 3 months, or a half a year, 6 months, or maybe a year and a half to get a better rate of return. You're going to get out of that stock and go somewhere else. And that may explain why the market can't hold rallies this week. Well, we'll still keep our eye on a daily close over that 117 number. And by the way, if you take a look here, the high of the week, 116.62, it can't even get above that 117 number. So that's the story there. All right, move on. I want to talk about some energy stocks because the energy complex got absolutely berated. You know it, I know it. Everyone's been pumping energy because of the Middle East tensions, because they pay, and I quote, juicy fat dividends, and you got to be in this market, and you got to be in energy, and everyone was in energy. And we got the SPRs that the Biden administration took out and deleted half our emergency supplies, and that's the backstop. And so people have been talking about that story now for over a year and a half. What happened today? It's interesting. It's the end of the quarter. Not a lot of real news about energy. Devon Energy just absolutely got berated. It was almost as if the Department of Justice is investigating them too, down almost 5%. So here's my thought. That's monthly pivot support. Volume is pretty light. I would nibble at this stock, and here's why. If it gets a little bit lower, and I don't want to be too cheesy, but I would start nibbling at that stock between 36.70, and maybe today's close 37.87. Nibble if you're going to buy, like, say, 500 or 1,000 shares of that. I'd nibble on like 20 to 25% size first. Here's why. It has a 7. The PE ratio is 7, and it pays a 5% dividend yield. It is a pretty decent dividend yield. It's better than, say, ConocoPhillips COP. It's better than Occidental, which is what Warren Buffett owns. And I think Devon has actually come closer, or at least pulled in a lot more, and mainly because it was a widely held stock that got taken to the woodshed as maybe funds are getting rid of for tax loss harvesting, or just saying, hey man, I'm taking a beating on this, and they're selling it for end of quarter window dressing, getting rid of the losers. So I thought I'd just mention that about Devon. I really don't have, other than that, I don't have a lot more to add for new positions for this week because it is the end of the quarter. What I do have is what we should do for taking some money off the table, and that's this environment. I think that by the way, here is Snowflake and what we were looking at. See those two green lines for Snowflake? So you want to follow this yourself. If we can get a daily close, look, we came right up to that line. It's an old high, it's an old pivot, it's an old low. It's just, this is a resistance zone. A daily close through those numbers, man, and the average of them is around 117.75 to be exact, precise. A daily close over that, and then, you know, the next stop's 124, and then we fill this gap, which is between this as wide as maybe the opening at Mammoth Cave in Kentucky, right? So from 120, a $6 wide gap in the market. That's the very least that we should start to see some upside over time, and that's what we're stalking. That one. That's a good rate of return with a lower risk factor. So this resistance, sideways, the longer it goes sideways, the bigger the breakout, they say. So once it breaks out on good, strong volume, and as you can clearly see, volume's el stinko, no bueno, but it needs good volume participation, and it will get on alongside there. So apart from our newsletter trades that we're unwinding a bit, I think everything is hunky-dory here. Devon Energy, I would take a stab at that. I mentioned for several times on this video about UPS, and I gave you UPS. We gave our trading room UPS. I tried to add that to the portfolio, UPS, in writing via this week's newsletter. Let's take a look at our analysis here at Maximize Sell. So this is the green line of support. I mean, it came down to it and never closed below that line in the sand. That's green means it's go. And when I get lazy, I just draw a trend line resistance to illustrate older resistance and definite longer term trend. So the average of the longer term trend on the boys in brown is moving lower. But the volume as it was moving lower to sideways was going up. It was in an accumulation mode. So my 2 cents is you got a little bit more, at least a 138 midpoint of this range, that old high. I like to look at a confluence of pivot resistance with old price points. So just as a reminder, back in February, the low was around 139, 138 and change. To be exact, it was 138.90. That coincides with next week and next month's pivot. And already Thinkorswim is targeting next week and next month's high right around that old low that we saw. So UPS, if it gets up into that zone, would be an area to scale out. So if you took some long positions on my post where I said looking for some delivering some alpha with a delivery company, that video was talking about UPS as a buy, and you got some upside, very limited heat. That's the other thing, and profits in a nice trade at that. And that's the gift. That's the gift of sometimes the market, that we don't have to deal with the tomfoolery of the market, the Department of Justice unannounced shakeouts, for example. And like I say, there's been a lot of shenanigans in the market here from, I don't know what the Security Exchange Commission's doing about it, but there's a lot of things that are going on in this market. You guys all know that as well. So when we look at these trades and we try to, trade on our own, I don't have at least the inside information that, some politicians are able to get, and then get that information extremely timely. But in the meantime, we use these indicators, which seem to be picking up a lot of those trades. We just don't know what's behind the signals until after it comes out. So we will continue to do a YouTube video, monitor this stuff, and alert you. And as always, we do this in our live trading room. So come visit the live trading room. And again, if you like what you hear here, give me a thumbs up or a comment as to what you'd like to see better and change. But that's the overall breadth of the market. It's looking positive. I can just tell you that looking at the rally for the end of the quarter should continue to prevail. But after that, remember, cycle high due is the end of this week. That means possibly pullback, strength into the end of the quarter or end of this week. The quarter ends officially Monday. I doubt anything will maybe happen. And then next week might be some fireworks to the downside or a mild pullback. So keep that in mind. Take care. We'll update you on a new YouTube as the markets warrant. Thanks a lot for listening.